Welcome to TradeTheNBI.com. This is John. This report is for the 23rd of December, and well, of course, we're going to have a half day for the 24th and then be off. So pretty much this is the market statement, and we kind of expected this back in, well, geez, summertime and that, particularly since we saw a lot of people who really expected things to fall apart and collapse, and it didn't, and that forced this drive at the end of the year, which we talked about early in November, and that there was going to be this push to have to catch up to yield for all those that missed the early part of things. And sure enough, that's exactly what it's led to. Don't expect much to change for this, given that we're about to approach a very holiday light here throughout this entire week. So I'm just going to keep it soft. You can see from the readings, there's a little bit of a rising short, the steel falling. It's not a surprise that we're not seeing any new inflows, but we're just also not seeing any significant selling. ABM all the way up to 31.98, so almost at the 32, because that's a huge spread here now between 32.27 here and 31.48, which is the 76%. So these ABMs provide some great intra-range points. We'll note that we had a positive extreme that takes us back down to the lows right here at the 32.08 range. So keep that one in mind, because that would be a reasonable pullback. And from where we are, that's like 20 points. So could be an option. And particularly the important key, I love watching this, is that shakeout rising, and as long as it keeps doing that, it's consistent with the higher highs. So no objection there. We've known that the NASDAQ has been much stronger. There's a huge separation between the DOC red and shorts rising, and even in this particular case. So finding a little bit of softness with the increase in shorts, but it's been pretty solid from a red standpoint. A little fade from mid-term and short-term buyers, but that's to be expected given this time frame in the zone. The euro softening right back up into the middle of this range. Not particularly strong indication one way or another that anything new is going to be happening. So the strength of the U.S. economy is just overpowering other currencies, because the dollar is still the place to go, despite all of the complaining here about people. And well, of course, you even have the new budget deficits. You're not even deficit, but you have the budget, so you're not going to have that as a crisis, despite the impeachment. Other stuff seems to be happening. So what some people might have thought was complete paralysis, the government still seems to be moving and doing some things, which the market seems to be okay with. The rise in oil, I still think, is a precursor towards some expectation of continued growth in the economy, and I think that's an important one to watch, because if that doesn't just implode on itself, and there's no real positive extreme, so this isn't something that's just an outside move. There's a real demand question there, and I think that could ironically bode well for the first quarter going into next year, which you would think that in an election year there's going to be some more challenges, particularly if there's a great degree of uncertainty. But I think the market's kind of, at this particular point, pricing in a Trump re-election. So if that starts to change, we'll see the market do some crazy stuff, and you would see a spike in gold big time. Again, not moving anywhere. It's had a decent shakeout move. This should have propelled stronger if it was going to break out in any meaningful way. It's just holding on within this now lower 50% line, and just not able to get above it, even with rising gold at this point. So I think that there may even be some pullback in gold from that relationship. I had highlighted this was the Opus T program, and the setup, from the buy signal, which is back here at 31.40. So we're getting close to another 100-point move on this one. If we go ahead and take a look at our performance report, potentially, depends on when this closes. The periodic returns will vary somewhere in between there, but this is going to be just the biggest year ever for NBI Opus programs, and not a surprise. Market's done exactly what we've looked for. And huge with the profit factor for just this year. Pretty phenomenal stuff, and you can see that graph line now. Of course, I did have a question about the short side of the trade and some of the criteria that I'm going through, and probably before the end of the year I will release that. I'm going to be sending out the adjusted 5K Morganacci lines, which give you the tick counter. For those that do trade intraday, you can put it. You can even see it was operating there on the 50K Opus 2. Right here, it's just counting the bar for those that like to trade intraday without having to have too much information on their screens. And the interesting thing about that, adding the short program in there, it's complicated when you're having extreme runs and putting preference for the bull side of a continuation trend as the main precursor for strong moves and continuation, because even within the flattening moves we see on the 50K, you get plateau areas that justifiably are short signals. They just don't produce much of a down run, and sometimes it's hard to teach the computer the difference between a breakdown that begins with all of the right signals and then seeing that conversion because we didn't break down below a negative shakeout, or the shakeout just barely went negative and then started to turn back up around. And we see that quite often when we get some of these breaks, because even theoretically, when you look at these, excellent short signal from right there, it just comes down to the 50% now. It's still a significant number of points from the breakdown. Point is just you're within a broader move, and sometimes it's better to stay within the broader move. There's multiple schools of thought on this, and this is really becomes how active you want to be. Someone who wants to leave this program to run like it is, perfectly fine. You don't have to really pay a whole lot of attention to it. Someone who wants to actively trade can certainly scalp in between it quite a few points back and forth. I tried to pick the broadest approach for it. A similar concept was employed with the daily MBI Opus programs too, because in that sense, we were just looking to make sure that we captured a specific amount of return. But in so doing, we forfeit, in some cases, the big runs that have been to take place. Now, I will say that once we did have the central bank involvement in that, the anomaly of longer period runs certainly is not consistent with what the market normally does. Normally, it's a mean reversion situation. So that central bank alteration kind of skewed those little middle years between 2010 and 2016 or so. And it wasn't until Trump's election that we started to see the central bank actually pull out. And that gave us a few more gyrations. And then, as the economy began to recover and take off, then you had that actual boom from real economic growth. So that's where we're currently at. I will look to put that together, but as always, I will put up anything that's relevant. I'm not expecting a whole lot to happen, though, leading up to the holidays. So I want to wish everyone happy holidays as we lead into it. I'll probably prepare a report on the Christmas Eve that will be ready for post-Christmas action, because we'll move into the beginning of the new year. It's going to be kind of awkward because the new year will start middle week, and that will probably take until the following week. And new fund money will come in right at that time, so that'll be real interesting to start, literally the second week coming back. I think it's going to be dynamic, so looking forward to it. As always, though, trade well. Talk to you later.